Hoven from Advisor Ratings. Look, for the past few weeks, we've been talking to these guys, telling us about sort of the state of play in the financial advice industry. The group's now released its musical chairs first quarter report and can put some numbers to what many in the industry probably suspect. Mark, good to see you. What are the key findings in this report?
Well, I think the headline is that the industry is continuing to shrink at an alarming rate, which is particularly concerning at a time like COVID-19 where consumers need help. And there is an incredible spike in demand for financial advice. So the rate of decline of the industry is consistent over the last 5 or 6 quarters. It's shrinking at a rate of about 12 to 13% per year. So we saw that in Q1 this year, and it's been the same throughout last year. We've forecasted that rate, if it continues, it will lead to the industry shrinking from currently around just under 23,000 financial advisors to 15,000 in just a little over 3 years. Now that's not the direction we want this industry ahead. And the other concerning thing about that, of course, is that, we've said this before in our research, is that with that kind of exit from the industry, something like $900 billion of advised wealth will be in transition, looking for a home.
Mark, tell us, what are the drivers around this? Is it still fallout from Hayne? What's the cause? Is everyone going off to find a better job in some other area of wealth management? Why are so many people leaving the sector?
Yes, Simon, it's a complex response. There are many factors behind that. Clearly, the Royal Commission and the legislation that's followed Royal Commission is a big part of that. Somewhat perversely, just in the last week, of course, governments announced that they're going to relax or defer further legislation arising from Royal Commission. ASIC's also relaxing or deferring or delaying a number of other reviews or changes it plans to implement. So that kind of relief is important, but collectively, it's a requirement for the industry to professionalise. So they're having to reach new educational standards, which is partly a driver for people leaving the industry. The industry is heavily below the level of education required under those new standards. So over several years, it has to essentially re-educate itself, as well as doing ongoing professional development. That has been an impasse, but we don't believe that's the most significant reason for people leaving. It's just really tough business conditions. The cost of delivering advice continues to go up through regulation, through the need to improve the investment in technology, to re-engineer your fee structures, because part of the regulatory changes are the removal of commissions, the removal of grandfathering by the end of this year. So it's a whole range of factors that's driving people out of the industry. At the very time, as I said before, at the very time where there's a spike in demand and these people need to stay.
So does that mean, Mark, if there's a spike in demand and less people around to fill that demand, that there are just people out there who can't get advice? Or are you seeing any other trends, people finding advice in other areas? Are there more people going to robo-advice, that kind of stuff?
Well, I think it's going to create opportunities for some of the things you just mentioned. The enlightened advisors who have an appetite to stay and play, if you like, and feed this demand are probably ahead of the curve anyway. They've got the capacity to service their current clients who are, in most cases, demanding a lot more attention because of the current situation, and they've got the capacity to take on new clients. So that's a good thing. They've clearly engineered their businesses, they've got ahead of the curve, and they're ready and their doors are open. Others will be doing it in different ways. They will be employing digital solutions. We're a big supporter of the digital advice or digital personal finance tools. We call them smart tools to try and simplify the language and the misinformation around this sector. Most of these tools do not actually give advice, but they do help people with their personal finances. So I think the businesses are able to deploy that kind of technology at the front end. I call it a funnel, bringing new customers to advice into the ecosystem and helping them in simple ways. And at the back end, what we're seeing with a lot of advice businesses at the moment is they're trying to restructure and maintain profitability is that they're orphaning or jettisoning, I say benevolently transitioning their clients off to some kind of digital solution. So again, I think the firms that can do that well, in other words, they continue to remain profitable, they benevolently look after their clients that they used to have but are now sub-economic, and they push those people into digital solutions that can keep them whole and service their needs.
Mark, can't let you go without saying congratulations on your raise last week. Just run us quickly through how it went and what you're going to do with the money, because you're a startup yourself, working in the digital sector, bringing tech to financial advice. How did it go?
Thanks, Simon. Yeah, thanks for asking. We are a small business too, so we're dealing with all the challenges that small businesses have to face. The government's benefit programs have been really helpful for us. JobKeeper has been tremendous. But we thought we better take out a little bit more insurance. So we took the plunge and we started a rights issue, and we also raised some additional capital from new shareholders. We received money from existing shareholders, and we also took advantage of the crowdsource funding legislation that we relied on last year when we raised capital, and we repeated that effort through the virtual platform, and as I say, raised something like $400,000 through both of those mechanisms. So we will deploy that money carefully. We don't know how long this pandemic will last and how long it'll take to come out of this sort of economic malaise, but we will be ensuring that we strengthen our balance sheet, and we will be ensuring that we continue to work on the most important things, which are servicing current clients with our data services and very carefully building out additional capacity in our various services and tools.
Great. Mark Hoven, thank you.
Sounds like you got some good financial
advice.
Thanks,
good afternoon.
Yeah.